Let's do content. Oh. Live. Uh-huh. Nice. Closed captions. Right. It's changed. Yeah. All right, the layout's changed a bit. Nice. I mean, chat rate of the stream. Dum, 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 dum. Oh. All right. Looks like there's one person watching. Okay. Well, we finally got a good close. Finally. Now what? Now we're going to run into these. Hello. How you doing? Been trying to figure out now whether that is actually the trend in which case it's broken. Or is it all of these? It's just something that looks so right about that. So what does everyone reckon? All three of you, what do you reckon? Are we going up? Santarelli? So I keep looking at this and wondering why would that not reverse and send the price up higher? Every single time we've ever done this on Bitcoin historically has always been a bottom. But every other time you can see it. So there. That works. Like that, and then like that. I just don't understand why it shows up here, doesn't show up over here. Oops. You'd expect this to, at least have to come back down to here. There it is again. So 40K, pump. 54, pump. 78, pump. And really, you've got it in there too if you really want to be right there. 101, pump. Yeah, it was a 2D over here, 3D over here. So it kind of puts you in two minds about whether these shorts, which are high risk frontside shorts, whether they're actually going to play out now that we appear to be bouncing and breaking trends. Whether these will be the ones that get left behind for the next low. You don't really want to short these, just in case this thing is going to break trend and shoot up to 100 or even 95 because it's still got that long to play out there to 95. Yeah, it might actually be, and there's always going to be some little trapped moves that sit at the bottom of a range, which don't get revisited until eventually you come down and put in a lower low. So it's whether or not this is actually going to be the start of maybe that little Santa rally thing. Maybe. Who knows? Yeah. And the other one. What's it on this one? And then Sol, well, this thing is eventually toast, but it might go up. I manually went through and found every single refined point inside this big short. So it could technically it could go all the way up to 244 and still be in that one move. Somewhere inside there it's going to hit something in reverse, but then it's also still inside this older one. So that's yeah. the highest refined level inside there was 253.429, 428, sorry, and it went to 253.42 something, 42, yeah, 429. So it basically did every single refinement inside that candle before coming back down. So now it's created this, and we're not going up into it. Which just makes you wonder if it's gonna just dump. The only thing really that's gonna drag this up is just that Bitcoin's structure is better, really. So definitely thinking that that could take a bit of a nosedive in strength. So from a daily perspective, you'd expect this to travel up here. So you should get a reasonable short-term move. And then it runs into this. And this is definitely one of those situations where they could fake out the break of the trend, because it's going to run into that range trend and break level and another break level. So, I mean, they could wick up through there today, good old fake pump, and then bearish case would be they end up coming all the way back down under the trend, end up hitting that hold level, and if they stay down there too long, they're back under the trend again, and we go back to more boredom. So bullish case is, of course, it closes over this, and we bounce off the top of it, start going up, and there was your bottom, which it's possible. It's really just very classic TA. You just basically the middle of the range. We either regain the middle, go for the top, or we reject the middle, and all hell breaks loose. That's a pretty crappy place to start a candle in between the two trends. So if it pushes up and finds some resistance, and then within the next 7 days it could just end up straight back down here. Yeah, and that opened just underneath. Need to get the candle up in here. It's good to see it move a little bit though. It's straight into the 15-minute range trend. So from a TA perspective, this trend represents this level. So you've got to break out of this level, which this hard close candle breaks this level, but you haven't actually broken out of that range until you break that. Why it did this. So it might keep grinding up. Let's see. Yeah, so you can see what happens. That yellow candle there, which hard closes this range level all the way up to here. So then hard close, whoomph, off it goes. So what you really want is a hard close up here. Because that would be that one. Pity the wick so long on that. Also kind of sucky that it did this so early in the day. It's got to stay up here now. So that's probably the level that you want to see it close over tomorrow. 127.487. If it can get over that, then it'll be in a position to be over top of the trends and back up inside that range, and it can target that hold up there that's been kind of left behind and confluent with 4-day long completing and getting the second range level retested. And then that's most likely that would be the point at which a really big rejection could come, because you got this hard close underneath the level that snuck up above it yesterday. Just now it's test the middle, and the middle will either say yep, you can continue to the upside, or it's going to say go away, in which case it's going to lose all of this. I do like these range levels. They kind of perfectly line up with a lot of the support and resistance historically, and break levels up here. So I'd say they're pretty spot on. See if we get up there. And that probably adds a bit of confluence to possible rejection around that 136, because we've gone through it, nothing, hard closed below, but still hit it, hit it, hit it. So each one of these times it's hit it. This candle's been too weak to actually reaccumulate back to it, which now means that there's more likely there'll be greater sell pressure back at that level. So it looks like we're possibly doing what Tesla's doing, actually. Same sort of thing. Building a daily range to run into, yeah, similar to what this was doing. Possibly building a daily range to run into a setup weekly rejection. Maybe. Then we've got the monthlies. This isn't far away now. What you don't want is for that to close the month under 120. That'll be pretty world ending for Sol, I'd say. Looks like it's dumping back down now. Yep. At least there's some volatility, I suppose. That's going to be a possible 1 hour hold to the downside in 6 minutes if it doesn't recover. Definitely not making it that easy to establish whether they're going up or down, that's for sure. So I was thinking that we've got these longs that should get us up to about 136, 135. Then they've introduced this kind of stuff today, which means we now have resistance before that. Hmm. Yes, then if it gets to 136, it's going to run into something like this if it tries to get to 137, 138. It's already got stuff in the way at 132. And then you've got resistance at 135. And 3 and 9 day tomorrow. I wonder when that is. Hmm. and they're at 130.9. So we didn't hit that yet. We're dumping again. So when you bounce off a range trend like this coming through here, you should target the hold, which is up here. But if they can keep it down here long enough, engulf this yellow candle, they'll create a hold down here, and then the trend only has to target the closer hold. So it's all kind of like the longer the price stays at a level, the closer the resistance becomes to that level. And instead of bouncing up here like it would have in a pretty normal bullish market, it'll end up with, stuck in a range where it goes to like 122 and then bounces up to 127 and then, hold or trend, one of them has to break. But it's just not recovering fast enough. Very bearish. Overlapping candle. It's what it's basically showing is that the exchange believes the candle is already closed, whereas TradingView thinks it's still open. And so sometimes you just get these rallies that just seem to reject from odd places. Like if you look at this 144.700 line here, which was resistance, it doesn't really make sense that that was resistance if you look at it on TradingView. Like you would either think that it's going to be lower at the break level down here, or you'd think it's going to be higher, like the hold level or something up much higher, or maybe the trend. There'd be places that make sense, but that just doesn't really make a lot of sense. But then if you consider that the exchange already had this older candle here closing at a different time. And because of that, the break level is not where you actually think the break level is. So it's just a very strange thing. We've figured it out recently and still don't really understand it, but it means that, yeah, you've effectively got two completely different timelines running. And it seems that it adheres to one sometimes and adheres to the other sometimes and adheres to both sometimes. So I'm sure I'll figure it out one day. But, so you get completely missing candles as well. So yeah, yeah, it's one of the indicators that's been developed at the moment, but just got to find a way to feed it the information, which you can't feed stuff into TradingView indicators from external sources, which is there used to be a way, like looking at all of the old code uh, texts and handbooks, you used to be able to reference HTTP stuff, and basically then all you'd have to do is update that, and then the indicator could pull in from it. But yeah, it doesn't. None of that stuff really works anymore. Just like TradingView used to have an API, and they stopped it, and I guess they didn't really want everything getting overloaded too much. I suppose I don't really know, but once we figure out how to make it actually easy to use, then it will be probably valuable. You also can't set alerts and stuff on it because they're not actually real candles or real levels. You can't even put a you put if you want to do a trend, you got to do like everything manually because you find like see it thinks that that's the top, but it's up here. So sometimes they line up. That one, no, not quite. But yeah, so it's loads of fun to work with. You got to figure out when that actually did open. The open date is not the date down the bottom either. So you've got to figure out when it actually did open. And then, yeah, short version is it's really handy, but it's not easy to do much with it other than look at it and go, oh shit, there could actually be a level there that we're not considering, and we probably should be considering it. Yeah, the Tesla perp feed is lovely. I mean, it's a 7-day feed. It just pauses. Like instead of having, um, like if you look at it on a weekly, it just pauses. But where is that? If you look at it on a daily, it just has like two completely flat candles, which, but for bigger things, it's yeah, it's easy to work with. What was that here somewhere? This one. Yeah. So if I flick it over to daily, you'll see you just get these two completely flat sort of candles for when they're closed. But any period that is greater than their yeah, any period that basically is greater than the amount of time that they're closed for just becomes normally easily chartable. So it's going to be good once it's got a bit of history on it, that's for sure. Yeah, the origin indicator works. There's all the trend stuff's all working pretty good. The time array trends one is a bit hard to use, but it should be, because it's kind of more of an advanced thing to be doing anyway. And what else? You've sort of got to move if you're using the trend one for scalping, you've got to move the anchors around a wee bit, but that's just because the ranges change a lot when you're dealing with low time frame. For the bigger stuff like the daily, you just set them and forget it, and then it just automatically adapts everything as time goes on. And the hold level ones, working on something way bigger for that, which is a completely off-board, um, like a dashboard that you can log into. And because there's just too many limitations with TradingView. Like there's a thing in PineScript called requests.security, which is where you can be on a daily chart as an example, and you can try to pull information from a different time frame. But it's limited to the amount of requests. So if you want to try and really bring in the information you need, multi-time frame to make a choice, then it just can't access enough. So if you take it completely out of TradingView, get all the data and put it in something else, then yeah, it can become way bigger. So there's all the hold level stuff, kind of like where are some of these? These are some of the Hopium ones. Incomplete long to $325. What do you reckon? Chances of that happening this cycle? Maybe next. I can't remember where it was now. A LOL chart. This is the kind of really annoying stuff they do. Like they break a trend and just travel sideways across a horizontal level. But if you lose the level, they'll probably come down and retest the trend. So this is why you could dump back to 109 quite easily. And there's a refined level inside the daily structure down there as well. So it's pretty easy for them just to dump that down to there. And then that would mean they're hitting a 3-month range trend and a 3-month origin. Yeah, I don't know yet. Obviously the developers will want to be paid money. It'll be like a subscription thing. Whatever, you log in and then you'll be able to access all the different levels and kind of all the stuff I do manually, but it'll just be laid out in front of you. Here is your next level to yeah. There's free ones you can use. They're in the dev channel. It's pretty much the same thing. The hardest thing is really the data. Like it's easy enough to look at a chart and you don't really even need an indicator to tell where an origin level is. It's a break level that was hit, and then in this case the distribution on the next candle did not go back to it. So that's pretty much as easy as it is to find an origin level. What's not easy is that it could exist across 2 different timelines and hundreds of different timeframes. And that's the thing. And then you don't know, like this level down here at 109, it might be an origin level on, say, a 3-month, but it could be an origin level on a different time frame as well. And the target on the different time frame might be different. The trend might be in a different place. And so knowing where to actually take the trade from and to is the bit that is tricky, because if you're just looking at one time frame, you might not be really seeing the whole picture. So yeah, what you've sort of got to do to figure out the scope of a range is you've got to find the absolute biggest level that anything exists on, because that is effectively what its strength is. and then there will be a target to match the entry, and it might be lower down, like on a bigger time frame, depending on how it closed. Like this, like if you just looked at one time frame, this origin should bounce to this hold or that trend, but you don't know. There might actually be like a 4-month level sitting right here, or a 6-month or whatever. And so you're in a trade and it just suddenly stops and you think, oh, it's okay, it's a bit of a pullback, it's gonna recover, it'll keep going. But nah, you just ran into something bigger that you didn't know existed. So it's that's the value in having, I guess, a complete picture about what's going on, which needless to say is not very pretty right now for Sol. And once you see all the data laid out in front of you, you can actually see levels that just continuously appear across all the different time frames. Like the most bearish place, like when this candle closes, if it hasn't got back above 154.761 in the next 9 days, then you've got the greedy part of the hold is all up inside there, and then there'll be various refined levels, but there'll be like maybe just pulling a number out of nowhere. There'll be like say 20 levels inside that candle, but not all 20 of them actually matter because some of them are just their own ranges and some of them are part of the refined levels that exist as part of this range. And you've got to step through the refined levels in a certain way. And so if it breaks one, it'll go to the next and to the next and to the next until eventually it will get to the most greedy part of the overall structural move. And knowing where something is inside of a move is like golden because you can come along and go, say Bitcoin is in a like when the whole Germany sell-off thing happened, Bitcoin was sitting up about $70,000 and it was inside a move that was going to take it back to $53,000. The move started at about 60, the price was already up at 70 and it was going to go back to 53. But knowing where it is inside of that structure at any given moment is just, yeah, that's golden because you can go, oh wow, we're literally at the absolute top of a 3-month move and the price is going to dump to, whatever it might be, like, $83. At some point this thing's going to go to $83 and it could be quite soon actually because it's the trend's going to move over here when this trend breaks because of this big blue candle, and then that's going to, if it opens there, it's going to be on the wrong side if the price is as low as it is now, and then all it then takes is to hit the back of that trend and then travel down. And you've got the origin level to try and support it there at 109, but the thing is, if they do that at the start of January on a brand new candle, they can just dive all the way down here to this target. And then if it loses this trend, ends up hard closing under this trend, the next 3-month hold level is pretty much a complete round trip down to $21. So it's going to be a nice short. And so of course the bullish case is that this is all just a big fake out and they're reaccumulating down here and they've pretty much got 9 days to expose that. Like they need to either start pushing the price back up in the next 9 days, get the wick longer on the candle so that when the trend moves, the trend can bounce. And that would, so if they push it up here, close, and you see how a lot of these you can see how a lot of these levels are confluent. Like if it got to that daily level or that 4-day level at 136 and it managed to stay there, then it actually has a wick big enough that when the year closes and the trend moves, it can bounce the trend and then go into the hold. And anywhere then from 144,700 upwards could be the rejection point. The break level at here is actually not an origin level because every single candle that has ever been along it has touched it. So, for this to convert to an origin at this level, it has to spend 3 months never going back to that 180 sort of price point out there, 179. So, that would be a warning sign. Like even if it closed like in 3 months' time, say March, if it was at 173, which we know is a target for various reasons, and it closed the candle there, but it hadn't touched 179, then just get the hell out because it's gonna hit that, and it'll be like 3-month origin level goodbye. So that'll be pretty high time frame stuff. Yes, yeah. So the dev went on holiday for Christmas. He did take his laptop. He has done a little bit of work on it whilst being on Christmas holiday with friends and family. But it's yeah, it'll basically be like a dashboard that you can log into. It will list all of the levels as well as automatic refinement inside them. And then there'll be various other bits and pieces like filtering and all that kind of stuff, so you can get an idea about all the different moves that are in play. So if you're downtrending on a certain time frame, you can see the stuff that's bigger than that and go, okay, well then the daily downtrend is probably not going to stop until we reach whatever the next bigger level is, and that's yeah. I mean, if you'd had access to it, I don't know, a few months back, you would have been looking at something like these two candles here, and you would have been looking at all the refined levels up inside this wick, and there is no way you would be long-term bullish at that moment in your life. You'd be going, when are we going to go down? When? And it would just be a case of, because you'd already know it's going to go down. You just don't know at what level it was going to stop up inside this candle before it rolled over. But you could take some pretty easy, educated bets on that without even needing a whole bunch of getting paid with Soul Rockets. Soul Rockets are banned. People send Soul Rockets when the price is up here. It's an indicator it's going to go down. Yeah, finding all the levels inside here, there's probably, let's see, we'll do it. Let's do it. Come on. My computer is not that slow. It's very grunty. It's got as much memory as you can shove in it, and it still just can't manage these 90 odd tabs I have open across 4 different screens. It's right. Let's bring that up somewhere else. Okay. Right. Laggy. So, let's see. Right. So put some lines on our screen. Ugh. So normally if you're trying to refine a level, it's just a case of moving down in the time frames and looking for, structural fractals really. So you'd be looking at something like this and trying to find a level that's inside here, which you could bring this forward from the 3 month to something smaller. And there's nothing really in there, so we did kind of skip over. So I'm going to try 2 month. Yeah, so it's got to be behind this line because this is when everything got created. So straight away you can go to this, but we've just skipped heaps. Like we've just gone from 3 months to 2 months. There's potentially 30 plus other levels, in between these two, but that's effectively now, the start. And then we'll go down to 1 month. There's your 1 month. And there'll be some other level in here because you've got this rejection there. But if you're just skimming through, so you've now gone from 3 month to 2 month to 1 month. And so now we'll try a week, but I don't think there was anything. There's nothing on the week. So I'll try a 3 day. See if we've got anything on 3 day. Yep. So you got the 3 day all the way up there. Okay, and then we'll try the daily. And you got the daily slightly ahead, higher up. There it is. Okay. So from the moment the price went beyond this line, the direction is down, not up. It's set the price goes up. And what the price is doing is it's going through these various different levels of time until it finds the most refined moment inside the downwards move, and then it rolls over and it goes down. So understanding that from this moment here, there was going to be a big short appear. The question is, where's the entry? And the entry was that daily refinement up there, forward in time from where it basically said. So where it basically said here was we're going to go down, and then you can refine the start of the structure. You can find the greediest moment. That's when everyone's sending soul rockets and they're all talking about how it's going to go to 500 bucks. And it's now hit the most refined moment, and here we are. So now that was just a few time frames. Imagine that that's going on all the time across hundreds of them. And the reason it became kind of apparent that there was just stuff going on that you couldn't quite see is that you had charts like this where the first level anything should really reject at would have been this, but instead it rejected there slightly early. And then of course the level that should stop it would be this, but it's probably easier to use a line, right? Let's just put a line on that. So the level that should stop it would be that, but it stopped before that and carried on in the other direction. But isn't better to have high time frame instead of having several levels on the chart? Well, yeah, but the problem is that if you were to enter, let's say this monthly short, if you were just to enter on the high time frame entry of 189, the price goes all the way up to 253 before it comes down to 123 being the target. And that's because all of this was actually inside of that 3 month. So it was retracing up to the greedy point of the 3 month to then actually come back down, and it still actually got a ways to go to actually get to the 3 month target. So now we're bouncing off a 1 month origin level, but you can see it's not a very big bounce, and that's because it's not actually wanting to go up at the moment, it's wanting to go down. So this will give some kind of bounce, but it doesn't really have to do much more than go to the first resistance, which could be regarded as, that, which 120 up to 144, that's about all it has to do. And then if you think about what 144 is, go back to that 3 month chart. 144.7 is the first rejection point inside the new 3 month short that would form if we don't get above that level before the end of the year. So then you got 2 3 month shorts pending, and the thing that could potentially bounce them will be this 109 level. But if you had entered that trade at 189, you would have been in drawdown for months as the price went up and up and up. So the idea with getting, decent, big winning trades is that you find the greediest moment inside of the biggest move, and that's why you would have started to short, or you would have sold your spot, or whatever, at 253, because 253 was the greediest part inside the biggest move that we kind of know of. And actually, it's not the biggest move, unfortunately. There's bigger ones, but still, we won't go there. $42 sold at some point. You also got to be conscious of range trends too, because this could that trend is before that origin level, so even that could actually send it back up. Everyone who waits for 109 might not actually get to 109. Hello. Thanks. Yeah, I think that oopsie. All right, there it goes. So currently trying to work on a way of refining these, which is not anywhere near as easy as it is to refine the trading view candles, because these open and close on totally different times. So it's kind of fun, but somewhere down in here, like where the price is now, and this is absolute hopium right here, but somewhere down inside this candle right now, we might be at the greediest level of a long that takes Sol up to $325. So it's possible, but can't easily refine these. So we'll see. Once we can get this whole thing off trading view, then maybe. I think the highest point I've been able to find for it's like 325, and the lowest is about $42 or something. So that seems to be the widest range that exists. Mm. When did I start my Christmas vacation? Now? I'm not really doing too much. Just working on this project and doing some property stuff, and that's about it. Yeah, check this out. So this is one of the trades from a few weeks ago. So you got the 5-day level in here, which was actually hit by this blue candle right here, right at the beginning of all of this, and then bounced up. But if you were just looking over here, you wouldn't even see it. Like it just near missed it almost, and then went up. But over here, it actually entered the trade and went to the target. So it's just creepy. There was also like a trade in here as well, which there was that short. So there was a very subtle engulfment there, and then this candle, wicked down, and that doesn't even exist in there. And then there was this long in between these two, which this candle actually went up for the long and then rejected down off the trend, but it completed that long. And so in that few weeks there, while the price just really looks like it's just chopping sideways, doing nothing, bounced off the middle of nowhere, there was actually, one, two, three. So basically, there was a trade you could take every 5 days, just in amongst all that. And even if you look at that more recent rejection, you've got the short on both. Doesn't really matter how you see it. You know that you're going to get a short off this candle here, and it went up into it to about 133.749. Over here, this one didn't even start until 133.243, so it's short exists on both. So But yeah, it starts on the, or seems to, in this case, be more following the structure of the left-hand side than the right-hand side, even though it is still technically following the structure of the right-hand side as well. But it's just we entered in the last candle this support down the bottom, but actually we entered it weeks ago from the other direction, already had the trade. Yeah, so kind of waiting for it to go up a bit higher and then look to short it, or go a bit lower and look to long it. But there ain't much going on in the middle. Good morning. Oh, risk of a frontside fib trade. Trend, pretty much. Where's the trend? Like if you got, what was a good example? Let's find one that went pear-shaped. That looks like it probably had a problem. Also, just be real careful of doji candles in general, but okay. So there would have been a trend at the time running through here somewhere, like that. Okay. So you get this hold, and you go, cool, I'm going to long it. And yeah, okay, you did get as far as the trend, and then the trend basically said, no, goodbye, and that sends it down. So understanding hold levels are the thing designed to keep the price moving sideways for the purpose of breaking diagonal support or resistance. That's their goal in life. So when you are trading a fib trade, on the front side, you've got to be a bit careful about like where is the trend, because the trend may be in this instance down here at 147, whereas the target for the trade was 162. Now it got through it because the hold level actually managed to succeed, and it came down, and it actually created an origin. So it's probably more the origin broke the trend than the hold level broke the trend in this case. But it's the point of this level is really just to keep that price going this way. And then when it gets on the other side of the trend, it can go after the target. The thing is, once it gets on the other side of the trend, it's now the reverse, because this trend being broken is then going to target a hold or a break level. So you wouldn't necessarily have to just TP at the 162. It's just kind of really basic stuff there. You could look at TPing here at the origin, which would have given you a bigger move. You don't. I mean, the longer you keep the trade open, the more you risk some kind of structure developing that's going to go against you. But if you're looking at it and managing it, then that's not really a big deal. What you tend to find is that the levels themselves, like this 162, this 196, 229, 262, they're basically the levels that are getting created by whatever is controlling the move inside here. So if it gets over the top of one of these levels, it's probably going to make it to the next level, and if it gets over the top of the next level, it's probably going to make it to the next level, and if it gets off that, it's probably going to tag the top, and then that's your top. That's all 4 levels done on the 12-day chart. So voila, then it returns to the 50%, and then goes back to sweep the top. Yes, yeah, well, that'll do it. An origin will get in the way of it. I mean, that's effectively what that's why you sort of need to work top down from timeframes, and you need to be trading within within the area that you're not going to run into something bigger, because you just don't necessarily see it. It's actually why it is quite hard. Like if you look at just this, get rid of this stuff. If you look at the amount of time that has been spent in a price range, right? So if we look at Sol, all of this time, how many days we got going on in there? Okay, so you've got 707 days. So in amongst all of that, you could have basically divided by 2, 350. You could have 350 different timeframes across that period where there might be hold levels you don't know. You basically take it all and say, okay, well, if I just made them into 2 candles, one up, one down, or one down, one up, like, and of course, all these different time frames can start from all different times within this. So it's just, yeah, you gotta. What I've figured out is that there's some really, really big stuff, like when you're dealing with things like 11-week or 20-week time frames, and yeah, and all of these really big rejections and dumps, you can find them if you go looking. You can figure out why, but it's knowing it in advance that's the golden thing, really. Like, you would have literally got that entry to within the 3rd decimal place had you known that it was working through the refined levels of a 3-month short. Might actually get a good hold level there in 9 days if it stays up. First real sign of decent time frame reversing. Yeah, good night. Yeah, I've got some nice food waiting for me, I think. Yeah, stuff like this that would just catch people out all the time. Just, who knows those levels are there? Who's watching? actually quite bullish, just kind of looking at that. Support is laddering up. So it's just got to get through some trends and maybe you'll get those targets. Right. Well, I'm going to go eat some food. I might pop back in later if things start moving. Where is that other trend, eh? There it goes. Through there. I'd say the 4 hours trying to break through the trend there so it can maybe complete that short. So it looks like it might. So if it gets down under that 124 level, it's probably going to continue on down, but the other trend is kind of in the way. So it's, yeah. Interesting to see how they close that. Have a look at that in 55 odd minutes and see whether they push it back up, don't make the hold, stay above the trend, in which case it's probably just showing that they're doing a bit of a fake out to then get more shorts in and then come up and then bounce. But if they close it down like that, back under the trend, creating a hold level, then and haven't converted this break to an origin because every single one has touched it, then they're probably going to try and continue. But, right, gonna go eat some fish. Fish. All right, catch you later.